Meantime, Kering isn't the only luxury name down today. Porsche, one of the big laggards out of Europe today, down after the CEO warned about the future of the luxury consumer. That piqued the interest of our Robert Frank today. Hey, Robert.
Good morning, Carl. Well, Porsche's CFO this morning adding to fears that the luxury consumer may be breaking down a bit. He said, quote, "We are suffering in the entire economy. It's also hitting the luxury industry." Those shares down 12% this year, down about 6% today. And LVMH earlier this month reporting sales growth of 9%. Doesn't sound bad, but that was half the level of earlier quarters. LVMH stock down now 24% from its highs. The company's CFO saying, quote, "After 3 roaring years, growth is converging more in line with the historical average." And then luxury giant Kering taking the biggest hit. The owner of Gucci and Saint Laurent saw North American sales down 21%. Then Asia ex-Japan was flat as China recovery also slows. Kering's stock down 35% from its highs, now at its lowest level since March of 2020. Even Hermes, which beat on sales and is always the strongest of those luxury players, has seen its stock down 12%. Analysts say the most discretionary items from aspirational brands are most at risk right now. And guys, the surest sign that the roaring 20s may be ending for luxury, even champagne sales are down for the first time in 3 years. Sarah?
Does this mean, at least, Robert, that there'll be some relief on pricing? Because with these luxury handbags and shoes, it was like there was no ceiling.
You're right. I mean, you look at the Chanel flat bag, that now is $10,000 or more. That's twice what it was pre-pandemic. And as you've been pointing out for a while, it's that those price increases that were so dramatic for some products that may have just hit the ceiling. But a lot of it is just most of the buyers of luxury goods are not wealthy. They're upper middle class people that like to splurge. And again, when they're not having all that extra cash like they don't right now, that's going to hurt those discretionary purchases most.